Hey traders, Shane from GMT Futures FX. Welcome. I'm going to take you through the Euro US dollar V2 Renko Euro session review, and we're looking today specifically at the sell setup. So how do we identify a sell setup? What kind of trade opportunity are we looking for? All those things that we typically look at when we're trading in the market. We're going to go through exactly what's required to take a sell position or a short position on the Euro US dollar. And we'll jump in and have a look at that now, and we'll see how the market has fared today. So what I've done is I've just loaded up our chart, the Euro US dollar. You can see up in the top left hand corner that we have the Renko, and it's on the brick size, so that is 0.0005. Now it's pretty hard to see that, but you can see the euro just rolling up at the moment. Just on the data at the top of the screen there, but I'll take you through the live action here shortly. But this is our Euro session, so we're basically looking for, when I talk about the European session, I'm talking about looking at opportunities from around about 1:30, 2 o'clock through till about 5:30. So that's when we want to look for opportunities in the market. Now we've got some very, very simple indicators on our chart here. We don't want too much happening on the chart, because remember that even though we think we're really good multitaskers, our brain can only function on one thing at a time. So you might be very good at switching tasks very quickly, and that's what most of us do these days, but what we want to do is be able to focus in on just a very simple strategy. So that's what pretty much this is, a very simple, easy strategy, has an excellent reward to risk. And what we're looking for is we're looking for low risk, high reward strategies or trades to maintain our positive expectancy. So what we're looking for is we're looking for the MACD. Now if you're not familiar with the MACD, we have a video uploaded on our website that I've included as part of today's blog that'll give you a little bit of background training in the MACD. And it's important, if you're going to trade the MACD, that you understand when to use it, when not to use it, and it's really not an indicator you want to use in isolation. You want to have it with a second or third confirming tool. So what we're doing today is we're looking at the MACD with a moving average, very simple, and we're also using our support resistance, dynamic support resistance on our trend trader to potentially add positions to our strategy. So ideally with the MACD, we want the MACD showing up a potential area of divergence. So as you can see here, price is moving higher, and you see that we've got a series of higher. So we're looking for an opportunity where the MACD is running out of steam. Now the only way to really know that, if we're making higher highs, if we're here on the chart, is to use a potential indicator, either an oscillator or as we've said before, the MACD is a great tool for basically identifying when the market's becoming a little bit overbought and potentially fatiguing. So we're looking for that negative divergence. So we're looking for higher highs to be made on price, and the MACD to show that there's potentially not that momentum in the underlying price activity based on our indicator. So the other thing we want to do too is we want to make sure that we have a confirmation to take the trade. So what we're using here is we're using a close below the moving average. You can see there that our brick closes below the moving average. That's perfect. That gets us into the trade. So that's the catalyst for us to take the trade setup. Now what I typically do with these trade setups on the sell side is I'll work my stop 2 full bricks back above. Now I don't count the dissecting of the moving average, so that's where my stop would be, 139.27. My entry on the trade is going to be at 139.09. Now some of you may eliminate this trade because of the key level. Now what's a key level? A key level is where price sets up right on a whole number, so 139, 140, 141. The key level trades, if you're going to do that in your trading, then you definitely need to have an objective assessment of the loss ratio of key level trades, because it's no good just saying, well it's a key level, those key levels aren't profitable. Well, you actually need to make an assessment based on a data set that taking trades at the key level definitely not profitable, and if that's the case, then you would eliminate that trade. If your data and your system shows you that key level trades are profitable, then you would potentially take the trade, and that would be part of your trade plan. But for the purpose of this activity or this video, we're just going to show you a setup, and we'll be taking the trade irrespective of the key level. And you can see here that the trade sets up at 139.06, so it's 6 or 7 pips away from the key level. And as you can see, the trade moves down, gets a little bit of support there at the key level, not too much, and then just breaks down eventually. So it comes back up. Now what we've got here as well is we've actually got a trend trader setup. Now the trend trader setup is where our support line gets broken and we get our white candle printing to show us that we're potentially getting into a short. Now on the short side, I would be looking to add a position here in this trade at 138.97. So that's a better, if you're worried about key levels, that would be a better entry point because you're below the key level. You're not well and truly through it, but you're certainly below it. Now you get a little bit of a pop back up, so some buying pressure, but then as you can see, price starts to move down. Our stop doesn't get threatened at all, and we're away. So we had the MACD divergence lining up with the higher price point, and price just runs down beautifully. Now what you'll find is that what we're doing with the strategy is we're actually using a 5 brick trailing stop. So what does that mean? It means that we need to see the bricks close back above the moving average by 5 bricks, and that would take us out. So at the moment we've had 1, 2, 3, so we're certainly not taking a trade there because we're outside of our time. So remember, the time for trading is from 1:30, 2 o'clock through till 5:30 at the latest. So we don't want to trade really after 5:30, and you can see there that we're now at 8:44. So we're not taking any trades here, we're just continuing to stay within this trade we've got. And you'll see that as we move down, we start to get a trade in the opposite direction. Now if we have a look at the MACD, you'll see that we've actually got some divergence there, but this is outside of our time. So there's prices making lower lows, and the MACD's got positive divergence now. Now it had negative divergence initially, now I've got positive divergence. So if you were trading continually and looking to track and trade that period, then you would say that, right, well, I'm going to look to potentially take a trade in the opposite direction. But because this is outside of our trade time and around 8:30, which is a news time, then they would all be factors for considering not taking trades around this time of the day. But anyway, let's push on. So we've got price moving above that moving average, and there it is there. So you've got 1, 2, 3, 4, 5. So there's our 5 count. So we're out on that trade, and it gets us out there for 138.70. So a nice little push down. It's not a huge amount of pips. I mean, there was plenty on the trade. So if you looked at basically how far the trade moved in your favour, so the maximum favourable excursion, that was basically 85 pips. So we netted out in total back through, and takes us out at plus 35. Now you're not always going to obviously get the full points on the move that you're taking, but this is a trailing strategy, so we're looking for the bigger trade setups. That's why we're trailing with a 5 brick stop. Now if you decide you want to use a fixed target, you can certainly do that. You just got to make sure that your reward to risk is skewed in your favour. And you can see that the second contract there that we ran added another 25 points, or 25 pips I should say, so that gives us a total of 60 on the move. So that's a good result. And that's basically it for today's wrap for the sell setup. Now if you would like more information on GMT Futures and the strategies we trade, please feel free to email us at info@gmtfutures.com, and I look forward to catching you on the next video update. Cheers.